We're still overweight certain sectors in China, right? Sure. Is it still key to actually stick to those overweights at the moment? Because it seems like it's getting harder to convince the market that this rebound still has any signs of momentum or hope behind it right now.
Right. Well, the sorts of sectors that we typically like are either the newer economy, the sort of structural growth areas which will carry on expanding over time, irrespective really of this quarter's GDP print or not, and then some of the more cyclical things, for example, in higher-end consumption. But there is this very strange thing in markets that people tend only to like things which are going up at the moment. And of course, actually, if you buy things which have maybe had a correction, you're going to get a better price for it.
Yeah.
So it comes back to this word for us, patience, which is doing the work, doing the fundamentals, finding the companies which will be worth more in a year's time than they are now, and then sitting with them.
Let's have more of a deep conversation about Japan in particular. You talked about the corporate governance sort of play here. What's really changed, you think, here? How do you think it's going to play out?
Okay, so I think this is significant. In essence, the Japanese authorities for a long time have been trying to get corporates to do more of the right thing. And I think that for people who just focus on any day's headlines, they inevitably get frustrated because these things in Japan take a long time to play out. But cumulatively over a decade, a lot has changed. And the most recent impetus is the acknowledgement that valuations across most Japanese companies are too low. And the simple math is to get the price to book up, you need a higher ROE. And to get the ROE up, you can do one of three things. Improve your margins, which can be tough, get your asset turn up, which can be tough, or you increase leverage. And of course, this is an economy or a society where large numbers of companies have got very lazy balance sheets. They've got excess cash, they've got unutilized land, they've still got some cross-shareholdings, etc. If they start paying more money out to shareholders, return on equity will go up, which means that the valuation will go up. And so that's something which is really, really substantial across the market, we think.
This market is still quite under-owned, unloved for a decade or so. You know, what does it mean for portfolio construction then? How much exposure should an investor have in Japan now, you think?
It's been unloved for decades. And of course, not only has the buy side been paying less attention, but the sell side in Japan to a large extent has been gutted. And so I think there's a lot of misunderstanding, a lot of mispricing there, just sort of a vacuum of knowledge. I would say that very few investors actually have got a dedicated Japanese exposure in this part of the world. Maybe some people will get Japan through a broader APAC mandate. And really, it's a large, liquid market which is doing its own thing, which people shouldn't be ignoring. So I think there's plenty of capital at the margin to come in.
We had a guest a few weeks ago saying, look, this is the one market where inflation is actually an asset,
right?
Which is Japan. Does the BOJ normalizing, sometime later on this year, does it in any way drag down this market, you think?
No, we don't think the BOJ wants to do anything to jeopardize the inflation picture. The real question is, can inflation stick? So we're watching the wage data very, very carefully, because if workers can earn more money, their real incomes go up, they've got more money to spend, that'll be a really big deal in Japan. And just to reiterate the point, this isn't a sort of Japan waking up after a decade. This is Japan waking up after decades. And so if that changes, that's a really big deal for the region.
I got to ask you about Hong Kong, just given, the intense selling pressure here at the moment. You're still pretty overweight. Is it Hong Kong at the moment?
Well, I think that there are various sorts of ways of playing Hong Kong, but Hong Kong is still home to some fantastic regional franchises, for example, in financial services. And so we do have plenty of positions in Hong Kong, but they tend to be in businesses which are exploiting the broader regional growth pattern rather than anything specific to this city.